All right, guys. So, guys and girls, I should say. So, in this video, we're going to be looking at the method number two. We've got the Agimat method, which works on its own, really lovely. We decided to implement some technical analysis and use the TDI with the Agimat and the Maxwell equation to some great effect. It was working really lovely. Recently, especially in the last 2 weeks, I was introduced to another method which included this thing called the price borders. Now, the price border is actually an indicator which is free that you can add to your Agimat template to see where price is bouncing between the lines. Okay, now I'm going to actually pull up another chart more favorable to this. Probably not this one or that one. I have so many open. But anyone, it doesn't matter. I'm just going to go through how this actually works. Now, I tested this over the last, I would say 5 days. It was over a period of over a week, but I wasn't trading it every single day. As you know, I only trade fully on Monday through Thursday. And the other days I might be managing trades or actually looking at planning trades because I don't trade on Sundays or Fridays. Now, this uses the Heikin-Ashi candles, which you can see here. The price line borders, the settings of which I will share with you if you don't have them already. And everything is the same. You've got the TDI, we've got the Maxwell here, which is actually closed. And everything's the same. Just add the price line borders, okay? But we use Heikin-Ashi candles on this. I find Heikin-Ashi candles are better to use than Japanese candlesticks, okay? So just look at my setup here. You can see in the indicator list, I've got the Traders Dynamic Index. I've got the Agimat, the full template there with all of the trimmings. The BA, which when you add that gives you the symbol, which is good. And what doesn't come with the template is this SMBPCT, which is part of the market maker template, which I like to see the spread and the candle time with my broker. So how it actually works is what you're looking for is, firstly, you're looking for a black arrow with a yellow box, okay, indicating that the trend is coming to an end. We don't necessarily have to wait for the white candle anymore, or we don't necessarily have to wait for a clear close above the AM line. Although these features are just further confirmation that the trend is going in the right direction. I'll show you why in a minute. Of course, we can also use the TDI as further confirmation, but really it's about these bands, okay? So the bands alone, as I said, are not enough. You do, I mean, because you would have entered here and received some form of slippage. So you want to know roughly where to enter. And what you want to do is you want to wait until the band is pierced. When the band is pierced, you can set your price border, okay, within here. And these are the settings: 20, 0, 2, 100. And these are normally set to false, okay? So you want to change them to true so that you get the alerts. Especially you get an alert when the bands are actually pierced. So when the bands are pierced, you know that the price shouldn't really extend too far down. I'm actually looking at the 1 hour chart, and that's what I've been testing it on. But you want to know that actually it's going to be going up. Now, all you're waiting for is an entry. Now, price can extend beyond, but what you're looking for, and this can actually reappear down here, but the trend is still going to go up. You're just waiting for an opportunity to get in. Now, what we want to do is we want to wait for the Heikin-Ashi candle to change from one color to the next. And then once we see that, we can enter the trade. Now here, some people may want to check that we enter the trade here because there's been a crossing where the green line crosses above the red line. When the green line is above the red on the TDI, that means the trend is going up. And when the red line crosses above the green line, more than likely the trend is going down. Okay, so now we've got additional confirmation here that there's been a crossing of the TDI in conjunction with the price line borders where there's been a penetration of the band, the lower band in this case, and up she goes. Okay, now this trade would have gone for, I think this is one of the trades that I caught last week. This trade ran for 99 pips over 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, maybe 12 hours. Okay, and then it dropped back. You could have still been in this trade now if you were trailing a stop loss and you hadn't got stopped out, which I did. Okay, so using the TDI and obviously using the level, so anything below the 32 you're looking for a retracement to the upside, anything above the 68 again you're looking for a retracement to the downside, and then with your price line borders it's quite perfect. Now let's have a look at another pair. Let's have a look at OddCAD, because OddCAD is one. I'm just going to remove these Fibonacci retracement tools, which I'll speak about as well, because some people have been asking me about that. Let me just remove those. So just remove that one, this Fibbo and that Fibbo there. Okay, and then this Fibbo here. Let's remove this one. Okay, so what's happened here is, here before you did have a black arrow with a yellow box. Okay, now this trend has come down here because you see the market opened on Sunday on the 10th, sorry, around here. Okay, 13th, and subsequently price was going up. Now this is on the 4 hour, but let's just have a look at the hour. Now what happened here, and you may have seen in the discussion in the group, Adebayo was on a buy, Mabola was on a buy as well, but because this pierced the band here, I decided I was going to jump in. Well, why do you think I shouldn't have jumped in here? Well, one of the reasons why I shouldn't have jumped in is because there's no black arrow, yellow box. In fact, it can be any sort. It doesn't have to be a black arrow with a yellow box. If it's a black arrow with a yellow box, then that's even more powerful. But if it's just a yellow box, that's something to take quite seriously, especially on the higher time frames. Okay, but normally look for a black arrow with a yellow box. Anyway, I entered the trade, and I think I caught about 22 pips before I was stopped out on the retracement. And quite rightly so. This really was always going to be a buy, and this continues to be a well, it's now going into sell, as you can see here. And I did know that this was coming because the black arrow with the yellow box appeared here, and it rose a little bit, and it's now falling down. What will happen is this will continue to fall down. You can see the Maxwell is pointing down as well to support that. Is pointing down, and then once you get a clear candle underneath here, you'll see a white arrow appears, which further confirms that this could possibly continue to go down. Now, another thing which I wanted to point out is, one person asked me, like, how do I actually measure my exits and entrances? Now, if you go to the H4, you can see how this is done. And what I did here, because this was a black arrow with a yellow box, what I tend to do is to measure the actual retracement, not from here. I actually measure it from the last black arrow from here. Okay, and if you draw more or less in the middle, you can just pull down. Okay, this will actually give you, as you can see here, as I pull down, you see these targets. Now, one of the targets is 23.6. Now, this is going to be the first bus stop on the retracement. Now, because this 23.6 is in confluence with this large quarter point, meaning that it's along the same line, this is quite an important part. If price does break this strong wall, thick wall, it should continue up to the 38.2, and you're possibly even looking for a retracement up to the 50 level on the H4. Now, that's somewhat different to what's going on here. You see price reaching the 38.2 again, and it's now coming back down. So it looks as though it's struggling on the lower time frames, because the lower time frames make up the higher time frames. It's struggling against the 38.2 and quite possibly could be coming down. TDI does support that as well. That's why I would say that this trend is coming to an end. Now, you're still with me. The Maxwell equation does show an uptrend, so it could still point up to the 50. We'll have to wait and see until tomorrow. I'm not actually in this trade at the moment, and I know some people are, but they're trailing their stop loss, and I hope for their sake that it does continue up to the 50. Okay, but that's how I measure my plan in terms of how far up will this thing go, what's the possibilities, and when I trail my stop loss, when do I get out? Okay, because if you get to $200, $300 or whatever it is for you, and you don't get out, you could possibly be looking at $100, $150 on a trade when you could have taken it at $300, $400, right? So it's always good to use Fibonacci in this way. Okay. Another way on this particular chart to use Fibonacci is to, let me just remove this fibs here. Okay, I'm just going to remove that. You can look at this retracement here. So it came to an end and bounced back up. How far up is it going to go? What happened last time? So you measure from here. And again, you can see, again, it reached the 61.8 level from there. Okay, so could it happen again? Who knows? But you stay in. But also pay attention to the bands as well. It's coming to the top of the bands. It's already pierced the band. If a yellow arrow appeared over there, then that trend is definitely over. Okay, so that's kind of like how you use it. So this is the strategy, guys, that we're using. That works. I do like the fact that it includes the TDI because I'm quite comfortable with the TDI. So really these bands are acting as additional support, additional confirmation for how I'm trading. And it certainly is increasing the probability of my trades, and all of the trades that I've called and taken sparingly this week, because I am doing some other things offline, and I haven't traded as much, but all of my trades have come out shining, or I've been stopped out with a few pips, which, you know, some pips are better than any at all. Okay, so if you use this strategy, just place the bands on here using the settings. Okay, using these settings of the price border, which I'll put in the group, 20, 0 to 100, and it works beautifully. Now, which pairs should you actually use this on, you would ask. Now, I tested this on a few other pairs. It didn't work at all. Euro JPY was one of them that it just didn't make sense, and wasn't conforming at all. But here are the pairs that I would recommend that you should be trading anyway. These are the best pairs to be trading. Okay, so have a look at this now. During the London session, okay, you should be focused on Euro USD, GBP USD. Okay, if you're first starting Forex, let me just say, if you're first starting Forex, you want to be trading 6 pairs. Okay, these are the US pairs. Okay, why the US pairs? Is because the US economy is the largest in the world. Okay, most currency is transacted in US dollars. Okay, so foreign exchange, how we make money, is obviously on the exchange of currency. People need to buy goods in the States or need US dollars to travel there, or not even to travel but to do business. So therefore most of the transactions are happening in USD. So you want to pick up the USD pairs and really get familiar. I would say start with 3 or 4, but there's 6. These are the majors: Euro USD, GBP USD, Australian dollar USD, USD CHF, and so forth. You can see them here. During New York, you want to be trading these USD pairs. You can still trade Euro USD and GBP USD because there's an overlap, but these are the pairs that I would recommend that you choose, and these are the pairs that do work with the price bands. Also, during the London session, there are other pairs as well which you can consider, and these are the following. Okay, no, I won't copy that. These are the following here. Okay, Euro NZD, GBP NZD, Euro AUD, etc., etc., etc. You can read them here, take a screenshot, do whatever you've got to do. And during the New York session, you want to just bring in, again, Euro USD, USD CAD, NZD USD, and XA USD, which is gold. Now, gold I don't trade unless, because gold works with goes in the same direction as AUD USD, because Australia is the 3rd largest producer of gold in the world. Okay, so if things are going right with gold, then the Australian dollar is going to be affected. The USD JPY moves opposite to gold, so in terms of correlation, if I'm in a trade with USD JPY, I may look at gold and see what's happening, or AUD USD. But personally, I don't trade gold because the spreads are way too high. If the spreads are high and I'm paying a fee, then I'm just looking at risk versus reward. So I'd rather not do that. And if a pair is moving in the same direction, then I'd rather change that, because the cost for trading it is a lot less for me. I don't actually pay commission on my trades. I actually pay a spread and a swap fee. So that's what I actually do. Okay, so this is coming up to like 15 minutes. I'm only going to be a few more minutes, guys, but I just really wanted to ram home that these are the pairs that I trade. I actually monitor 16 pairs. Okay, during London, I'm tracking and looking at about 8 pairs, but I may only place trades with 2 or 3. Okay, just depending on the position that they're at. During New York, I'm looking at the same amount of pairs, another 8, but I'm only looking to place trades where the opportunity presents itself. Now, I don't just come to the charts and start trading either, and I don't recommend that any of you do that. There has to be some planning. Normally on Sunday afternoon, just have a look at the charts and see where your pairs are at. An easy way to do it is to just look at all the USD pairs and see, because each currency is broken down into 2 pairs. Okay, you got the base currency and the core currency. But you should know that if something dramatic is going to happen with the US dollar, or Trump opens his mouth, then your USD pair is going to be affected no matter what this is. Okay, so that's how you make your work easier. Now, also, if you know that Euro USD moves in conjunction with NZD USD, then you don't have to plan so much your activity. So it's not about trading all 16 or all 18, guys. That's why I don't use a scanner or anything like that for these things, because there are only a few pairs consistently that I would trade. And the only way that it could vary is because Euro USD hasn't presented any opportunities and it's quite flat. So there's no need to force the issue at all. Okay, so coming back to the charts here, this one in particular, odd CAD, I know some guys are in this trade. I'm not calling a trade per se, but I'm looking for sell opportunities on this based off of the H1. There was another one which looked kind of juicy as well too. Let's just see. Let's move to the H1 on this one. This is, yeah, this is GA. Of course, those people that got into this trade, you can see that it's continuing to rise. Okay, it's continuing to rise at 42 pips at the moment. And because it's at the 23.6 and pushing up, it should reach at least the 38.2, and we'll see where it goes. Look at the bands here. It crossed the band here. That's an opportunity. Look at this. Beautiful. This is a key indication to jump in. Now, it's crossed the band here, but the color of the Heikin-Ashi candle hasn't changed. As soon as it changes, you want to check what the situation is. Has TDI crossed? Yes, it has. Perfectly. Okay, now let's have a look at Maxwell. What's Maxwell saying? Well, Maxwell is doing a bunch of foolishness here and doesn't really indicate to us that we should jump in. However, you could still, ignoring Maxwell, looking further ahead at where it's going to go, that it's going to be moving up. Okay. Another thing I should tell you as well too is measuring how many pips are going to be on this upward move for the Maxwell is not accurate. Okay. I've asked about this before, and I've seen some people do this. They take the crosshairs and they measure up to here, thinking that the Agimat is going to give you 87 pips. You see it says 872 there. It's going to give you 87 pips. Well, that's not the case. In fact, it might actually be less than that. So you can't rely on just placing a crosshair on a Maxwell to say that's what it is. What you need to do is get in a trade, look to protect your investment once you're in the trade with a stop loss after you're in profit. So you would either place your stop loss at break even or in profit. Okay, and just hope to get stopped out. And if you don't get stopped out and it keeps going up, that's even better. Okay, but I'm telling you that this here should reach the 38.2 or 50.0, and here we've got some confluence with a minor quarter point. In fact, no, this is a major quarter point right here. You can see it here. So as price, if price actually breaks the 175 level, which it is doing now, and continues up, the next candle should open quite soon. Let's just remove the so we can see when the next candle is opening. I'm just going to remove this now. So yeah, so it's quite clear now. I can see that the next candle is in 24 minutes. So if that opens up blue, and you know, I'm probably expecting it to go up however far. But you're not, you know, in trading, you can set like a take profit and then, you know, just go to sleep and know when it hits your take profit, then you're out. But another way of doing it, if you are awake, is to just trail your stop loss. You know, whether you use the software to do that, I don't know if there's free indicators that do that and manage your trade, so you can trade and you know, just trail it by 15 pips or 10 pips or whatever you want to do. But I think sometimes 15 to 20 pips is enough to just give yourself enough room just in case it bounces back and then continues up. You get knocked out of trading and it goes for another 40 pips. Always aim for like 15 to 20 pips initially, and just move your stop loss to break even and give yourself that breathing space. All right. And don't use the stop loss before that, because sometimes you could get stop hunted, unless you're going to enter trade before you go to sleep, which I don't recommend you do either. So yeah, that is the price border method. A really good method. I wasn't a big fan of it. I wasn't impressed initially because I wasn't really following the rules, and I discovered that this can't work with every single pair. If you do use it with these pairs only. Okay, only these pairs, guys. If there are people in other groups getting results with other pairs, then fine. You guys are using you know, Mexican peso. I know you're scalping, but you know, obviously I'm using the higher time frame, the H1. I'm not going down to the M15 for confirmation because it's what it is. Okay, so I do hope that you found this video useful. These are some of the questions that were asked of me. Let me just make sure that there isn't anything else that I've missed. If you just give me a second. Frequently asked questions. Let's just see. Whoa. Hold on. Where are you, my friend? I'm just going through my phone whilst I'm talking to see. Yeah, so how many pips do I go for? So I've told you initially I'm looking for 15 to 20 pips, but obviously I'm looking for a lot more. I love to catch like 70, 80 pips on one trade. That doesn't happen in 15 minutes. I'm quite prepared to trail my stop loss and hold a trade for a day and a half if I have to. How many pips do you go for? That's answered. So please tell me in details how you take your trades and your choice of pairs, which I've answered. Does the white arrow repaint in the 1 hour time frame? Yes. Repainting is one of those words where the price may extend, but what you will see that even if this comes down here, it's still going to go in that direction. So repainting with the Agimat isn't necessarily an issue. If there's a news event here, then this price may still go up, but it's still saying that the trend is ending, and it will actually go down. Okay, so hope I've answered your questions, guys. Obviously, if there are any of you guys that are thinking of don't have the Agimat yet and are thinking of getting it, please just drop me a private message and I can answer your questions. Because you will have questions. You've seen the success within the group that people are having using it. Not everybody has the Agimat, but you know, hopefully we'll be able to change that for some people quite soon. All right. So there was one person actually that traded with us without the Agimat and traded enough money to actually buy it. I think whether it's the Agimat or some other form of tool, you have to have a plan and you have to have a tool to assist you to see the moves that the market maker is making. Because trust me, guys, these market makers have tools. The tools that they have, it puts us at a serious disadvantage if we're not willing to invest in ourselves. This market is a $5 trillion market. Okay, the stock market's 257 billion. The Forex market is huge, and so therefore they're going to use every single tool in their arsenal to protect their investment and actually to take money off of us. So it's only right that we see that and invest in ourselves in tools such like this. It doesn't have to be this, but such tools like this to give us to even the playing field per se. Okay, so yeah, keep up the great work. Some great analysis happening in the groups. I'm going to post this now on a private a video. This is exclusively for you guys. Please do not share this with any other groups or any place else, because it's only for the people in this group. And trade well. We'll speak soon. Take care. Bye bye.